Hi everyone, hope you're all doing well, and today we're going to do a little bit of an update into Beyond Meat. They have released some news recently which is basically coming out and saying that their Q3 isn't going to be in line with revenue expectations. They have lowered the outlook, and because of that the stock reacted badly off that news, and today I'm going to give my opinion on it, what it means for the stock as well. Now, as you guys know, I try to be as honest as possible, even if it's a company I own. I basically say if it's good, it's bad. Even if it's a company I own, I'm not going to blag it and say, oh yeah, don't worry, it's absolutely amazing. It will, you know, if I see something awful, I'll call that out for you guys. I don't mind doing that. I try and build this channel on honesty as well. So even though it's a company that I own, I'm going to pretty much spend a lot of this video saying that it was a horrible quarter and it was bad news. You know, there's no way to go around that, and I will be honest as I can. And as well as that, you know, sometimes I don't think people appreciate this. You know, it's quite easy for me to kind of keep banging on about this stocks that are doing well and be like, oh, it's absolutely amazing, look at this stock up so and so, but I don't really build the channel on that. I build the channel on actually talking about a lot of negative news, and negative news for me normally means that it's buying opportunities. And I think quite often people forget that I focus on negative news quite often and look at that as buying opportunities. It would be quite easy for me to be a bit of a channel and go, oh, look at this stock I invested in, it's up 400%, I'm absolutely amazing, I'm the best investor ever. You know, I try not build a channel on that. I try to build a channel on being honest and try and talk about negative news, even if it's stocks that I own that have negative news, because I try and assess all these opportunities and give my opinion on them to you, because hopefully, you know, quite often you look at them as buying opportunities as well, which I think is something that sometimes is missed sometimes because of that. So yeah, I just want to start off with saying that in general. But yeah, getting on to Beyond Meat, obviously the stock has reacted negatively to that news. Right now, as recording this video, it's down 12%, but you guys will be seeing this on Saturday, so it might have closed different to that. But at the moment, as recording this video, the stock is down 12%. Obviously, that is to the reaction of the news of this update, which we'll go through together in a second. But just before I go actually through the Q3 update that is here, I just want to talk about the peak fear that's out there. And I feel like I shout this out enough on the channel, but maybe I'm not shouting it loud enough so the people at the back can hear, or maybe they're not listening sometimes. But it does still amaze me to this day how quick negative news can change opinions. The amount of times I'm seeing a company, the amount of times I'm seeing people claim to be long-term investors, and then one piece of bad news comes out and the stock has this reaction on the share price, and they lose their absolute I was going to say something there, but I can't say that for monetization. Lose the absolute marbles like over it. Like they go, oh my goodness, we're down 12%. It's the end of the world. Oh, it's a bad company now. I want to sell this company. Oh, it's had one quarter that's really bad. I'm going to sell this company. The amount of times I'm seeing long-term, so-called long-term investors, people that invest into a company for the next, you know, 2, 3, 4, 5, even longer, 10 years into a company, and have a reaction off a stock price or one piece of news and lose their absolute marbles over that one piece of news, still blows my mind. Like, it's unbelievable how it's not getting into people's heads to stop doing that. People reacting off one quarter earnings and losing it. Don't get me wrong, I'm going to, in a second when I go through the news with Beyond Meat, I'm going to say, you know, how disappointed I am and how bad of a quarter it was. But where you look as a long-term investor, I can't see how one quarter totally throws it out. And the thing is, you know, people get so caught up in, like, if a stock goes up like 3%, like, oh yeah, it's up 3%, oh it's up 6%, oh I'm up 10% on that, it's up 20%. But it's the reaction of a drop really does, it's not like every investor out there, but I see it quite often, because obviously as someone that makes content on this, obviously I get like the reactions of quite a lot of people out there, and the reaction instantly from like a 12% drop, and everyone's like, oh, what is going on? I don't like this company anymore, I'm going to panic sell. And it's absolutely stupid. Like, you got to have a actual rational view of like a year, 2 year, 3 year, 4 year, 5 year game plan, and stick to that game plan. You can't go to have a game plan and then over 3 months something happens, then you go, oh, that's it, I'm done with this company. You're not going to be successful at all. All you are is an emotional investor, and in fact you're not even a long-term investor, you're a short-term trader. And it was just unbelievable once again to still see a reaction like that off one piece of news and off a bit of share price anyway. Now, getting on to the Q3, we'll go through the Q3, which, like I said, was horrible, and we'll have a quick scan of that. So today Beyond Meat announced that the company is reducing its third quarter net revenue outlook. The company is proceeding through its quarterly close, and based on preliminary results, the company now expects third quarter net revenues of approximately 106 million as compared to prior guidance of 120 to 140 million. So that is massively down. That is obviously that the range that they gave was a big range, a 20 million different range here. It was a massive range that they gave, but even then to come up 106 million is quite below the 120 million on the low end. So that is quite a miss. Obviously that's what's the big shock is here. And on it said there was multiple factors contributed to the shortfall during the quarter. Some of it was macro and microeconomic factors, including among others the effect of the COVID-19 Delta variant. The company also experienced a decrease in retail orders that persisted longer than expected from a Canadian distributor, coinciding with the reopening of restaurants. Expected incremental orders that did not materialize from a change in distributor servicing one of the company's larger customers. Observed delays in distribution expansion and shelf resets believed to be driven by customer labor shortages, and incurred shortfalls at certain US food service customers believed to be driven by the effects of CV-19 Delta variant. The company further experienced challenges in operations that led to unfulfilled orders, with severe weather as a key driver, resulting in the loss of potable water for 2 weeks in one Pennsylvania facility and water damage to inventory in another. So as you can see there was a few reasons they gave for that miss in revenue. From my point of view is that, yeah, sure, like what they said there, that it looks like there has been a few problems. Unsure why there wasn't more openness about them problems while going through Q3, and why it has taken, well, I mean, Q3 ended pretty much 20 days ago, so you would pretty much know if there was something going wrong at least a month ago. So, they have come out and told us now at least. I mean, if they told us in earnings, that would have been an absolute bloodbath, but, at least they've come out and told us earlier. I don't know why there wasn't more openness about the problems that we're having. That probably would have maybe save the share price and made us more aware as a shareholder what was kind of going on inside the company, I guess. It sounds like a lot of problems in general. Obviously, we know the CV-19 has been causing a few problems for a lot of stocks. Interestingly, there wasn't too much blame on logistics that we've seen from many other companies, and I made a video basically saying that a lot of companies that sell physical products will have a lot of problems in the quarter because of that, but there wasn't really much of that blame actually in that earnings report. So I don't know exactly what's kind of going on there. It seemed like there was more problems of actual demand issue and getting and sorting out that demand, which is probably the worst thing. It actually sounded more like, to me, there was actually a little hint of a bit of a sales problem, really. I mean, we don't know exactly if it was a sales problem, because management aren't going to straight out and come and say, look, we actually sold a lot less than what we thought, because that would actually kill the share price. If you came out and said, oh, we actually have a sales problem, then that would have obviously caused a lot of problem. But it seems like to me to be, 120 million and then come in around the 106 million range, that's a massive dip, or a massive miss from what we were expecting. From what they said there, yeah, it sounds like there could be a little bit of that in there, but for that massive miss, we're talking a massive 14 million miss here, and then if you go from the top line, that's a 34 million miss. That's a huge amount to get wrong on expectations. So I mean, Q3 is historically the worst quarter. It was the worst quarter last year. But yeah, for me personally, there might have been a few problems in there. It might be that's why you can't base it off one quarter. There might have been them problems in there. But for me, it did seem like a bit of a quarter that was just a bit of a shambles. It looked like there were a bit of poor sales in there, and it is important that management do bounce back from that and put in a decent Q4 coming up going forward. So it is one of those that it's a little bit cautious of. Looks like there is some little warnings here that sales have been pretty poor, as well as a combination of a few things. So it is something to keep an eye on. There's no way around it. It was a poor Q3, and there's not much I can say about that apart from, yeah, it was terrible. But moving on to what is the future for the company. Well, the future for the company is that Q2 was actually amazing. Q2, this is how short-term minded a few people can get with an investment. If we just go back 3 months ago, Q2 was absolutely amazing with this investment. The food service was absolutely booming. Retail was still pretty strong, and the revenue growth beat expectations. And everything in Q2 looked like this company was on fire, and probably, in my opinion, that should have the Beyond Meat share price should have had that more reflected into it. The Beyond Meat share price didn't really react off the Q2 earnings, which I think was unfair, and it actually went down. And now we actually have a poor earnings, and it's exactly the same down as like Q2, but Q2 was amazing and Q3 was terrible, and that's why you can't really react off short-term share prices, because it doesn't really matter. What matters is in the long term, because if the company carries on doing good things, then that will move the share price in the right direction. We had amazing Q2, it goes down. We have a terrible Q3, it goes down. And that's why you can't really react too much off the short-term share prices. But going into the future, like, people get caught up on a horrible Q3, and it was horrible. It was a horrible Q3, but Q2 was really good. And don't start judging a company off one quarter when the last quarter everybody was buzzing about it. It just doesn't make sense. Now there is some sort of pressure going into Q4. Like, okay, we've had every company every so often is going to have a bad quarter. It's more of the long-term game and going forward. So what we want to see is, like, going into Q4 is to make sure that they have not horrible. If we have a horrible Q4 again, then it's like, okay, we've had a horrible Q3, a horrible Q4. Now it's starting to get worrying. Like, if there's a big miss on sales, I mean, the big thing is that when we do get around to Q3s, then we'll probably get more detail on actually like how everything's going in general, and that'll be more interesting. So I am still kind of waiting around to Q3 just to get the more details of how much exactly was the slowdown in retail, how much was the slowdown in food service, how was international growth going, and stuff like that. So there's still that to kind of look forward to and see what's exactly going on there. But going on to Q4, we probably do want to see a Q4 where it does bounce back and doesn't have a lot of these problems or what seems like a sales problem going into Q4. So that's probably something to kind of look out for. But the big thing as well is, like, looking at the future of this investment, you know, the amount of people that claim to be a long-term investor and then not actually looking at long-term. For me, that's what I was looking at, is the long-term. And for me, you know, going into 2022 is an exciting year for this company, because we should see the launch of the Pepsi deal, which is absolutely massive going forward. We should see, hopefully, the launch of the McPlant burger in 2022. Obviously, that is still a bit more up in the air how big that's going to be, but we'll see. Hopefully, that could be a massive thing. But if you have them two things play out in 2022, then that could be pretty good. Obviously in 2022 you would hope that we are kind of at the point then of the food service is completely normal, retail pretty normal, and Beyond Meat is then set up to have a very good 2022. In my opinion, hopefully Q4 should still give it that. It still should be good, a decent Q4, but as well as that, you know, 2022 is the major catalyst for Beyond Meat. If Beyond Meat doesn't have a good 2022, then this is probably going to be a bust investment for me. This is where quite a few of the catalysts do need to kick on. But the big catalyst hasn't even come really into play for this company yet. And like I said, for me, I'm a long-term investor. I've been in this company now for 12 months. And when I get to the 24-month period, which will be the end of 2022, I'll probably be able to look at this investment and go, okay, it hasn't worked out. Or I'll look at this investment and go, it has worked out. So it is kind of getting a bit more to like the serious time for Beyond Meat right now. But at no point am I kind of judging this investment off a quarter. That would be criminal to do, and that's what I feel like a few people are doing. What will be interesting is the next kind of 12 months are a big 12 months for Beyond Meat. I guess one thing that people will ask is, currently, am I buying any shares? I'm not currently buying any shares in Beyond Meat, just because I've already been built in this position for 12 months. I'm pretty happy with my position size, to be honest. The only way that I would probably end up buying any more Beyond Meat shares is that if it went all the way down to like 80 or 70, that would be the only way I would probably push to buying it. But right now I'm currently down about 19% on this position, and at the moment, like I said, a stock like Beyond Meat, it wouldn't take too much to kind of get that to recover. You know, we are kind of down in the dumps here, and peak negativity, peak fears out on this one. And if there was something, if we get around to Q3 and there was a little bit of positive news, you could easily see this pop back up. So for me, I'm happy with my position size. I'm just going to sit on it here. But like I said, sure, you know, as a shareholder, I was disappointed in Q3. But like I said, there just seems a lot for me that at the moment people are judging a horrible quarter off what was a really good quarter, let's not forget, very quickly on this company. And like I said, for me, it's all about the long-term game. And like I said previously, for me, I'll make my decision up at the end of next year, and at the end of next year I will tell you if it has been a good investment or if it has been a bad investment. So that's where I stand with that one. Like I said, disappointed, but still not one, in my opinion, that I'm giving up on just yet. So hope that video was useful anyway. If it was, hit the like button, and I'll see you next video.